10:01, so we'll go ahead and get started. We'll call the mayor is not going to be here today and has asked that I chair again, and so we'll go ahead and call the meeting to order for the October 29th, 2019 City Employees Pension Fund Board meeting. So before we get started on the regular agenda items, if there would be a motion to allow me to, which is really strange for me to say, for me to chair the meeting.
I make a motion for the Susan the chair.
All right, there's a motion and second on the floor to have Councilmember Lambs chair the meeting in lieu of the mayor. Is there any discussion? All in favor, please say aye.
Aye.
Any opposed? All right, thank you. So, first item on the agenda is the minutes of the August 27th special meeting. Hopefully everybody's had a chance to review them and to see if there are any questions or corrections or suggestions. If not, a motion would be appropriate to approve.
I move to approve.
Okay, Mr. Maxwell made a motion and Ms. Lang seconded the motion to approve the minutes. Any discussion on that motion? There being none, all in favor, please say aye.
Aye.
Any opposed? All right. The next item is your first quarter expenses. As you can see, it's just for information only, but it lets you know. I always like it when we see the funeral expenses still at the available adopted budget amount. That's a nice thing. Is there any discussion or questions on the expenses? There being none, the next item is the ratification of transfer of the estimated payroll for September 2019 to December 2019, and the estimate the transfer is for $300,000. Welcome, Councilmember.
I'm in the wrong end.
I'm at the wrong end?
Yeah.
Oh, I knew you might say something. No offense. So we're actually on item number 3 on the agenda, and is there a motion? We need a proper motion for item 3 for the transfer of $300,000 to pay the payroll. Is there a motion?
So moved.
All right. Is there a second?
Second.
All right. A motion made by Mrs. Lang and seconded by Councilmember Evans. Is there any discussion on that motion? There being none, all in favor, please say aye.
Aye.
Any opposed? Thank you. Mr. Calvert, the investment review for the previous quarter. Oh, does he need one?
Yeah, I gave away all of my extra copies, so.
Oh,
Sorry.
Here, do you want?
Oh,
I just need this
Oh,
one.
you just, okay. Turning to page 1, the performance was relatively good for the third quarter. The return-seeking portfolio, that's the portfolio that's diversified in equities, generated a total return of 1.07%, outperforming the benchmark by a very small margin of just 2 basis points. The increase in the market value for that particular portion of the portfolio was an increase of $207,777. The liability defeasing portfolio, which is matched to all the expected payments of the pension fund, increased by a larger margin because you're going to see that interest rates for fixed income securities declined sharply during the third quarter, and that particular portion of the portfolio increased by $266,142, or a total return of 2.54%. There weren't any significant changes during the third quarter. However, we did boost up the allocation to equities as part of our strategy, as we saw the Federal Reserve lower rates twice, once in July and once in September. It's made fixed income investments less attractive. So we budged up the allocation to equities slightly. On page 2 is the allocation, overall allocation. There is a mislabeling. The return-seeking portfolio is the $20.4 million, while the liability-defeasing portfolio is the $11.1 million. So you can see that the liability-defeasing portfolio represents about 35% of the overall pension fund, while the remainder represents the return-seeking portfolio, with about 23% of the overall portfolio as part of a fixed income strategy. Over the last 12 months, the return-seeking portfolio increased in market value by $830,000, and the liability-defeasing portfolio, even though it's a smaller portion of the overall pension fund, actually increased by $1.15 million. And you can see that the 12-month total return was 11.14%. The main driver of the underperformance for the return-seeking portfolio was our allocations to fixed income portfolios. In terms of we were a little bit more biased towards equities, and equities actually performed worse than fixed income securities over the 12-month period ending September 30th, 2019. And then some of our allocations to individual managers actually underperformed their respective benchmarks because they were short in this market when things just dropped quite considerably. But the overall combined portfolio generated a total return over the last 12 months of 7.68%. In this type of rate environment where stocks are at all-time highs, we would think that that's pretty impressive. So in terms of the market update, the end of just June represented the longest expansion in the United States history, with 123 consecutive months of growing GDP growth. We looked at this chart going back to 1949, and one of the observations is that growth during the last 10 years has been slower than other periods of economic expansion. As you can see, the average growth rate was only 2.3% compared to when you saw it in the 40s and the 50s at 7%, 6.2%. But the periods of economic recession are less frequent. So in terms of before, in the 40s and 50s, you almost saw a recession every 3 or 4 years. Now we're going on 10 years without having a recession. As our additional commentary will allude, PFM's current forecast is that there's not going to be an imminent recession in the next 6 to 12 months. Things are relatively good all around. Things are weakening, but in terms of they're not in a situation where we would see negative GDP growth. Later this week, we're going to see third quarter GDP for the period of ending September 30th. We're expecting it to be a one handle, which means that growth expanded by maybe 1.5% to 2%. It's going to be slower than it was in the first half, but there's nowhere near native GDP growth, which would represent a recession. The unemployment market continues to be at all-time lows. The unemployment rate here in the United States is at 3.5%. The economy at 136,000 jobs in September, and we're getting to a situation where economists are sort of befuddled in terms of we would want to have more job growth, a number in the 200,000 range. However, there may not be enough employees to actually fill those positions. Mm-hmm. So it's like you can't create jobs if you don't have people to fill those positions. Right. Yeah. So in terms of there is maybe the propensity that more jobs could be created, but if you can't fill them, you can't really create them and add to that overall number. One of the concerns over the last 3 or 4 years by the Federal Reserve was at what point in time will wage pressures increase? And in terms of historically, is that if you have a very tight labor market, employers would have to sort of fight hand over fist in order to get that talent and increase salaries and wages. We're just not seeing this on a wide-scale basis. You may have instances here and there, but wage growth is only expanding at about 2.9%. Not any level that would be concerning for the Federal Reserve thinking that inflation is going to run rapid. Yields on fixed income investments continue to drop sharply. In terms of last year, at this time, we were looking at a yield on the 2-year Treasury note of 2.97%. We were expecting the Federal Reserve to raise rates. They actually did raise rates in December of 2018. Everyone thought it was a mistake, and you saw a very sharp decline in the stock market leading up to Christmas Eve. But things have reversed quite considerably, and now the 2-year Treasury note is at 1.62%, and it's essentially a very flat yield curve where 10-year Treasuries is also at just about 1.66%. So yields are much, much lower than they were previously. And this sort of goes back into our overall thesis about the return-seeking portfolio, that we're shifting away from fixed income asset allocations in favor of equity allocations, because the return prospects going forward in the next 2 to 3 years have been limited on the upside because of these lower yields. The Federal Reserve is currently meeting today and tomorrow. They're going to release their decision at about 2:15 tomorrow. The markets expect with 90% certainty that they're going to lower rates again. This would be their third decrease this year in 2019. The first decrease occurred in July, another one occurred in September, and now we have another meeting tomorrow where markets are essentially pricing in, and there was no contradictory Fed testimony or speeches that would suggest otherwise. What the markets are going to look at is if the Federal Reserve is going to lower rates again in December. Some of the economists have already started pricing in a rate cut in December, all ahead of the presidential election year in 2020, but it's not really necessarily on the table right now. So that's what's going to be more of a driving factor in the markets tomorrow. I like the chart on the next page, which summarizes some of the factors that are going to influence the equity and the fixed income markets over the 12 months. What we continue to see as definitely a headwind is trade tensions. We recently saw China and President Trump agree to essentially a temporary truce. With that deal supposed to be signed any time now, but there should be another round of negotiations. Whenever you see trade wars and escalating tension talks, you've seen a corresponding decrease in the stock market. When things have essentially smoothed over and that there's truce and that there's an agreement, things rebound, and now things are good. So we saw a record high on the S&P 500 yesterday. We continue to have concerns in the geopolitical space. Brexit, as Bill mentioned earlier, is definitely a concern. That's been an ongoing discussion ever since 2016, but it looks like it's going to move forward in some fashion over the next 3 months or so. And then it's like you also have protests in Hong Kong and other areas. So those are some of the factors. But in terms of economic growth, consumer confidence, continue to be at levels that aren't consistent with a recession. Overall, our views about the market, domestic equities continue to be favored. The U.S. economy is much stronger than it is globally. In fact, if you are a fixed income investor in Europe or Japan, you're very likely investing in sovereign bonds that have negative yields. That's just a concept that is just flabbergasting in terms of that you would lend money and you would actually pay the person that you're borrowing money to hold on to your money. So in terms of, there was an interesting article in the Netherlands that there was a bank that started offering negative mortgage rates, that a homeowner could actually borrow money and actually have a stated negative rate on their mortgage. So the bank got a lot of calls and they said, yeah, but after you factor in all the fees, it was basically zero as opposed to negative. But in terms of zero on a mortgage rate, that you could live in a house and not pay any interest to the borrower, is just mind-numbing. But there's so much money, so much fixed income assets that are out there that the bank could basically borrow and then lend and still make a profit at zero. So it's right now, I think the number is about $16-17 trillion of debt that's in the negative category. And there are actually U.S.-based companies such as Apple that can issue overseas at negative yields. So this all bodes in terms of we're probably going to see low rates for some foreseeable time period, and that there's not going to be an instant rebound because the U.S. continues to be the haven for fixed income assets because their rates are much, much higher. We've actually seen certain countries that recall Greece, they were in pretty dire circumstances this a few years ago. They're issuing debt at yields less than the United States right now. And they were being considered a country that would be kicked out of the European Union, but in just a few years, now their debt yield's lower. So it's just a very interesting phenomenon. In this next section, under section 2, you can see more highlights. But just in general, S&P 500, which is a barometer for the domestic equity market over the last year, returned 4.25%. Over the last 12 months, the Barclays Ag, which is about 2/3 down the page, over the last year returned 10.3%. So over the last 12-month period, fixed income indices, fixed income mandates generate significantly higher returns than their domestic or international counterparts. International, it's been a theme that we've had for the last couple years, that the prospects internationally aren't as rosy as they are here in the United States, and you can see that they coincide with the returns, with the MSCI index generating a return of negative 1.34% over the last 12 months. So going behind tab 3 and just skipping ahead, you can see the overall total fund during the 1 quarter period generated a return of 1.07%. Over the last year, a return of 4.44%. We definitely underperformed the benchmark, but you can see longer periods, the 2-year to 3-year period, we outperformed. So it's hopefully just a very temporary aberration where we've underperformed. And you can see similar themes in terms of domestic equities outperformed international equities, and then compared to fixed income portfolios, you can see where the difference is. And this is an area where you could see that the main drag has been in the fixed income sector. Over the last year, the fixed income fund generated a return of 9.16% versus the Barclays Ag, which returned 10.3%. So most of the underperformance was driven based upon the underlying strategies of the fixed income managers. And it's just been a very turbulent year for fixed income investors, as people were expecting the Fed to continue to raise rates at the beginning of 2019, and all of a sudden, in a short order of 6 weeks, they've completely changed their entire mandate. So it was definitely a hard change to digest and process. Any questions?
Well, I can tell you your analysis about the job market's spot on. Tough market.
For locally?
Locally, yeah.
Okay, yeah.
I always appreciate the depth of this. I mean, it's definitely, and this is such a healthy portfolio to begin with, but to hear your take and everything on it, given the fact that it's healthy as it is, so I will always say that I'm so thankful of the healthiness of this. So, all right, is there any discussion, any further comments or questions for Mr. Calvert? No? All right, well,
Thank you. Thank you so much.
appreciate that very much, thank you. All right, we'll go on to, excuse me, the next item in your packet is the standard memorandum explaining about 2 deaths, and they are both beneficiaries, so no benefits are due, but this is just for information only. The 2 passings, are there any questions on that memo? There being none, on to the next is the item of the ordinance, and are you guys going to depart?
We are.
Okay.
Include, recuse.
We're
I
recusing.
we understand, so we still have 1, 2, 3, 4, 5, 6, so we still have 4, correct? Okay,
Thank you.
all right. We'll excuse Mr. Maxwell and Mr. O'Mara for the discussion of item number 6, because they are recusing themselves from this item. So everybody should have received the draft ordinance as it was created from the discussion and the motion at the past special meeting that we had in August. And so I guess today, for discussion purposes, I guess we would discuss today the moving it forward, or any difference or discussion on the language or concerns. And so I'll just open up the floor for anybody that wants to talk about it. Any questions? Well, you all are a quiet group today, man.
Well, I wasn't here. I read the minutes. So can you? How did this conversation come about? I think I vaguely might remember this
Talking
kind of
about
it.
it for a couple
Just-
of years.
Yeah, I need a refresher. It's kind of
Sure. Well, I mean, I think that we have talked about the amount of payroll that the retirees and the beneficiaries received is that it receives. It's a very small amount, because most of these salaries, they were set back in the late 80s or mid 80s, probably, even, to be honest. I mean, there was one salary, I think, that was early 90s, but that was the last person that retired. But for most of these salaries have been, the base annuity has been only increased annually by 3% COLA. And there's been one stipend that supplement that was given in 2013. And, that was one of my questions is has there been, prior to history, I don't know if there's ever been another supplement that was processed. And it probably would have had to been before 92 when I came on board in the office. But I don't know if do you know, Susan?
For my time.
I know it.
Looking at the ordinance, because the one-time supplement is actually in the ordinance as well. And there's nothing before that. Like I don't see any other amendment to the ordinance that would show that there was another one-time supplement that raised and then went back to, I guess, the original purpose.
I thought that was the case, but I thought I would just say that for the record, because I think that's very important to know that the retirees of this pension system, in my personal opinion and professional opinion, they have really left the portfolio to grow on its own and not tagged it numerous times to benefit from it. So they just have taken what it's given them. So does that help any?
It does, and I think I was asking partially more for the record than anything else. But yeah, I just can't remember. I remember just kind of talking about it, but yeah. So that information was helpful. Not posting, it's just more information.
I guess the thing that we need to do today, and I would ask Ms. Murphy to clarify for me if I'm incorrect, but basically to set its path forward, what we would recommend as the path forward as of today.
Well, I guess it could be two ways. It could either be through the Legistar process, but I don't know if it's housed in finance, or if it's housed under the council clerk's office, who would start at Legistar 5.
I think it's the council clerk's office that did the 2013.
Okay. So if that's the case, we could do it that way. You all could walk it on. Walk-ons kind of get more eyes and more attention, and which is fine, because I don't think there's anything wrong with this. But when you're just go through the normal process, then it is just kind of goes with the flow. The issue would be timing. I want to say the Legistar deadline.
It's the 18th.
November, to get it on before council break, which I think is, and then I didn't know whether that's enough time for you to get that. Okay.
Yeah, there's not as many people in this fund, so
Okay.
coming up with what their new base rate is and giving them their raises in January should be fine.
So that was the only
As long as I
question.
had to, December to do it in, so
Sure.
yeah.
And so I think the last council meeting is the 3rd or 5th?
The 3rd.
5th. Yeah, that Thursday, the 5th.
It is.
So that would be the second reading, would be, first reading would be 3rd, 5th would be.
Well, and I personally, I went through and tried to, I always look at this as what it appears to be from the outside. And while I agree with what you just said, if we ended up having this go through Legistar and having it show up on Tuesday, December 3rd work session, getting first reading at that council meeting that follows work session, and then second reading on the 5th, there could be some that would say that appeared to be rushing it. And there's less time for someone to see it as it goes through, versus if it were introduced, and this would have to be walked on at a work session on Tuesday the 19th, then it wouldn't get first reading until the 21st of October, and then second reading it would be on the 3rd. And there's a little bit more time that lapses in between. So I'd written down some scenarios.
21st of November, sorry, okay.
That-
All right.
Yes, that's correct, yes, sorry, I said,
No.
that's right, yeah.
No, I was just
Yeah,
making
we're
sure,
gonna
I'm like, I don't want to go
backwards.
back.
No, sorry, I didn't write the November for that, so I would ask, this board to make suggestions as to what you all think. I'm sure that there will be some discussion. I remember the discussion prior to my retirement when the supplement was brought forward, and what I would hope that we would make sure that we had the answer to what we assumed that some of the questions were going to be when we bring it forward to our colleagues. Like the fact that there's no Social Security received by these retarees. There's only been one supplement, which was in 2013, that there have not been changes to the cost of living, and that this fund, by what I looked in our actuary, I'm pretty sure it's 300% plus funded. So I think that increasing it from what I believe an annual amount of $50,000 for the 4% increase in the annual retirement allowance it's only $50,609 annually. So I just don't think that's going to break the bank. But so I think having some of those pieces of information in however it comes together and is reported out, I think is going to be very valuable for our colleagues. So.
Just as an aside, and this is just something from Keith Horn when we were discussing this, and I've stated it on the record, we cannot find a state law or any reason why we cannot do this. There's nothing that says, because this is their fund and how it is voted on by this body. However, if you all wanted to get advice from a tax expert or a pension expert that could say whether or not, we don't believe that there's going to be any pushback from the beneficiary when all of the current beneficiaries, meaning the police and fire, we don't believe that there will be any pushback from them. But I guess my statement is that I don't know that we can adequately answer the question if it's posed to say, do they have a say-so? We don't believe there's anything, and this is just researching state law, anything that says that they have a say-so on how we spend it currently. But I'm sure that somebody may ask that question. So I don't know whether if you all are fine, we're fine, but that was something that Keith wanted me just to bring to your attention if you all wanted to just get an opinion from someone that practices pension law.
Have they been apprised of this, the police and fire?
No, we've not, because
The union, or who would do?
No,
No.
Pension board is the pension.
it would be the
board?
pension board.
Can we give them a heads up? Or is that not good?
I'd be surprised if they didn't already know about it, but
This was saying, I believe that some of them have heard about this
I'm sure they
trickling
have.
through time,
I'm sure
but
they
and that's what. So Susan and I have.
Nobody has said a word about it, but I mean, there is a pension board meeting on the 13th of November, that if, you all want that addressed, just to give them a heads up, I mean, it can be done, but, they feel it's their money and they need to spend it it's their money.
Yeah.
And that's what several have said.
Yeah, and that's what I've done from them.
Huh?
It's whose money?
This
Fee
This-
board.
Yeah,
yeah.
exactly.
Right.
And they're completely, from the individuals that I know of that spoke about it, they're 100% comfortable with it. But if it's the pleasure, we can always bring it up on the 13th of November.
And I just brought this up just because you just said anticipating. That's the only other anticipation, that just to cover that final base of, but as I stated before, the same way on our regular insurance policies, our children don't have a right to say how we live or use our wealth while we're living, just because they're the beneficiaries of whatever may come. Like, they're not entitled to it. So I think we're
Well,
fine.
when this law was passed, was this board apprised at all that it was?
That it was gonna go
before
to
the state
them?
legislature?
No, ma'am, it
No.
was not.
No, it was not.
So, you know what?
Yeah, I think there's a difference in opinion, and I wasn't here at that time. That was well before I think it kind of got snuck in at the end. But I think it was everybody's belief that this was pension board did not know
It
about
was
it.
FOP. They went to,
Yeah, there we go.
they
And that's what
lobbied
happened.
senators
That's what
outside our
happened.
delegation to get
I
it done.
guarantee you, the FOP knew it.
The FOP definitely knew,
I live
because that's the
with
only one.
firemen.
So I think that the thought was that this balance, whenever the last retiree passed away, was coming back to the general fund. So I can tell you that the Urban County government was completely unaware. So the police and fire, for that law to take place and it goes into the police, that was not something that this board knew about, Urban County government or our lobbyists. I think it was as Councilmember Bledsoe stated, I think it was the FOP or.
Well, who was smart enough to do that?
Let's not have that conversation.
Yeah, I was about to say, and as we move on.
Let's not even,
You,
because
I'll be happy to
you
say.
might have some issues with some organizations if you ask the right question.
okay.
Well, I think what we need to do is
Yeah.
go back to the discussion about when we want to bring this forward. And I would advocate, in light of there being 2 weeks versus 2 days in between first and second reading, I would advocate for us to bring it forward on Tuesday, November 19th, and then it won't get first reading until November 21st, and then it doesn't get second reading until December 3rd. I would advocate, and there's another scenario. I mean, we could go for November 12th and have it given first reading at November 14th, and November 21st will be the second reading. However, I am, I'm going right in the middle, like I sometimes tend to do. But still yet, there's a 2 week period there that can be for public, because that's the reason we have first and second reading. It allows public exposure to issues that are on our council meeting docket. So does anybody have any concerns with that, or do you prefer we do it a different way? Or I don't know if it's proper. I don't know if we really need to have a motion to move it forward in that way. I think that, I don't know, legally, I'll look at you guys, and I don't think that it's just a best,
Just however you all
just
decide you wanna
suggested.
move it.
I don't
Just-
think
I would
it's.
think walk-ons are kind of the exception to the rule. I would think the normal process is to just blue sheet it and go through. I don't know, that's just my thought process. So I think actually walking it on would be more of I'm losing my words this morning.
It's a
Deterring
normal
from-
progression,
yeah,
yeah,
the
and I don't have any
normal
problem with that, but I want you all to make the decision.
And I challenge anyone that argues that retirees should not get more money. But just can't wait till the discussion.
So,
Call me naive, I don't know.
Well, under regular procedures,
Yes, ma'am.
what is
I think we should go.
Just the
send-
normal
I mean, just
procedures?
take it.
Worst case
I mean,
scenario.
Uh-huh.
It's ready, the ordinance is ready. I mean, if it were anything else, what would you do with it? I mean, just, if, what you said, if it's to go that route,
Okay.
then just do it at whatever the next date is.
Okay.
well, and this is what we were discussing. We were trying to figure out the blue sheet calendar, and I don't mind to run downstairs real quick and grab it, but we still have like November the 11th. Actually, we have November 4th is a Monday as well, to enter into the Legistar file.
Okay.
So if we do it on the 4th or the 11th, it would hit a work session. If we do it by the 4th, it should hit the 19th work session,
Okay.
potentially.
I think that's your best bet,
And
is to
so-
do it, due process.
But if she I think what the date that Abigail was giving us is the 18th is the final.
That's the final.
But if we still have 3 Mondays, 4th, 11th, and 18th to actually put it in the normal process, and it should show up on the work session docket on the 19th. But I don't want to say, I can run downstairs real quick and none of us have our legislative calendar with us.
Right, yeah, we would have to double check, but that, I mean, that makes sense, yeah.
That's fine with me.
I think it's more transparency that way,
Yeah.
and then don't worry about telling the pension board.
Okay.
Because.
It'll be
They-
public notice, they'll see
Yeah.
those.
That's right,
Mhm.
that's right. Yeah.
So
I don't have any problem with that
That's the best way to do it.
I'll get with Abigail and we'll see to get the blue sheet created and we'll figure out what time that needs to get in.
Okay.
But
And then she can just email everybody on the board that,
what the dates.
what the dates are.
Okay.
That's the easiest way.
Is everybody okay with that?
Sounds good.
Yeah. I have no problem whatsoever. I just want this group to make, be the suggester as to when it moves forward. So, okay, good. All right. Well, that is the last item. Oh,
We need a motion, don't we, to approve?
we had already.
They approved
They
the
approved it.
4%, and that's what the creation was. I think today was just a review.
Yeah, the ordinance had already,
Yeah.
the 4% had been approved, and
Yes.
this is just for our information, to see the language as it is written in a ordinance form. So, if there's no other discussion or items to be brought forward, then entertain a motion
Move adjourned.
to adjourn.
Second.
All right, there's a motion and a second,
How you doing?
everybody say aye. Aye.
How you doing?